Hey everyone, welcome to the Your Money, Your Life podcast. We're at episode 293 of the pod. Make sure wherever you're listening, you like, subscribe, five-star rate, and review this podcast. We do this every week. First podcast in September. Man, I don't know about you, but I don't know about September, man. How do you feel? I think this has been a weird start to the month. Craziness. It feels weird. Feel weird start to the month. We had the NFL kickoff, which was great. But then the rest of the month just feels weird. I don't know. Does anyone else feel the anxiety that people feel out there? I don't know. We'll see. But this is the first podcast for the month, so we have a lot to get through this. But a lot of numbers that come out, data that has come out, that's going to be helpful for us to get a gauge on what's going on in the economy. That's going to be helpful for us to understand what's going on for consumers, what's going on for everyone out there. So let's actually dive into those numbers and start off by giving ourselves a market update. We always do the market update first, just to gauge what's happening. So let's start with consumer prices. Consumer prices rose at an annual rate of 2.9% in August, as weekly jobless claims also jumped. So price consumers pay of a variety of goods moved higher than expected in August, while jobless claims accelerated, providing challenging economic signals for the Federal Reserve before its meeting next week. So the Fed is meeting next week. The consumer price index posted a seasonally adjusted 0.4% increase for the month, double the prior month, putting the annual inflation rate at 2.9%. So it crept up a bit here. Let's look at the chart. So if you look at this chart on YouTube, you're seeing it. We did creep up a bit here. And cores, we have core. I'm assuming that's core, and then we have just all items. So we've crept up a little bit. Not great. Now let's look back in the days of 2022 where inflation was just crazy, and they had to drive that down. And they have done a good job. We've driven it down, but we then now see that we've crept up a little bit. So what will that mean for the Fed? That's going to be the big tell. I will say that if you look at the market, the market's saying, hey, they bet the Fed's still going to do what they're supposed to do, meaning cut a 25 point cut at least. And some people are saying maybe 50% basis cut, but that, probably won't happen. But at least a 25% basis cut that we'll see here, more than likely from the Fed. So the market's still showing positivity, green, because they're expecting that cut to come through. But if you go back here, we saw the numbers from core. We saw the numbers from all items. The Labor Department also put out some information. They reported a surprise increase in weekly unemployment compensation filings to a seasonally adjusted 263,000 for the week ended September 6th, higher than the 235,000 estimate, and up 27,000 from the prior period. So that's not good. That means people are, again, unemployment. They're filing for unemployment, meaning that they're looking for the jobs. And it's not a good signal right there. Market pricing indicates 100% certainty that the Fed will lower its benchmark interest rate, currently targeted between 4.25% and 4.5%. However, there's been a slight implied chance that the Fed might choose to deviate from its usual quarter percentage point move that we were just talking about and cut by half a point. So there's a few smaller market pricers, betters that are saying that, hey, the Fed might do more than 25 basis points. They might do 50. They're at least going to do 25 in my mind. I highly doubt the 50-point move, 50 basis point move, but we'll see. So, you're seeing the market react to this information that the consumers are being hit. And still, the producer price index numbers came out and they were actually a little bit better. The producer price index numbers came out not too long ago, and those numbers were better. But you're seeing the consumers are still getting hit. And so that's going to play a part into how the Fed moves because they have to think about what consumers are paying for inflation more than producers, right? And so that data is going to be really, really looked into. Let's look at actually last week. Last 5 days were about flat. The market has moved up and down, but it's ended up about flat. For the month, we're up 2.31% for the past month. And the past 6 months have been really strong for the market. You saw companies like Oracle. We'll talk about Oracle in a second. They moved 30, 40% yesterday on the news that their AI data centers and infrastructures are going to be used heavily by some of the Mag 7 companies. And they moved 30, 40% in one day. That's the highest one day move they've had in like 2, 3 decades. Oracle, which Larry Ellison, founder and one of the shareholders and big shareholders, they said his net worth jumped, but I don't even know the number. It was several hundred millions or maybe billions, excuse me. increase in one day for him. The CEO of the company, who is off different person, Larry Ellison, who doesn't run the day to day anymore, they said her net worth moved 420 million in one day. That's crazy. So we're seeing different companies make different moves because of AI, and that's not stopping. So speaking of Oracle, OpenAI agreed to buy 300 billion in computing power over 5 years from Oracle. This is an anonymous insider source that said this. So the deal started set to start in 2027. It comes amid growing concern over a potential AI bubble. Erica's shares surged Wednesday as the software maker reported explosive cloud computing growth. By midday, Oracle co-founder Larry Ellison was challenging Elon Musk as the wealthiest person title. So that's what's happening. They're buying that computing power, and they need it from Oracle. They need it for other companies, and that's a crazy huge deal there. And they moved incredibly. The stock price moved incredibly yesterday, Wednesday, for those listening today. Um, so yeah, we'll have to keep our eye on Oracle and different companies that are offering this cloud computing power because again, you have to need it if people are going to be using AI and consuming the computations. It needs to be powered somewhere, and there's big companies that are winning from that. Let's talk more about the Mag 7. Amazon continues to broaden its reach into streaming advertising. They announced a partnership with Netflix to allow advertisers to use its demand side platform to access Netflix ad inventory. The alliance now makes nearly every streaming service and platform available to advertisers who use Amazon's DSP. Okay, interesting. So Netflix is and Amazon partnering on ads, streaming, advertising. Those things, of course, we know are huge hand in hand. And they have some sort of partnership bond here. Okay, we'll keep our eye on it. Let's move up. We just talked about inflation, but I want to dive in more because that's the big story right now for us. Um, Here's another LinkedIn article. A key price gauge rose in line with expectations as Americans paid more for food, housing, and cars. The consumer price index increased at an annual rate of 2.9%, up from 2.7 in July. The Bureau of Labor Statistics told us this Thursday morning. While inflation accelerated, the Federal Reserve has shifted focus to bolster a weaker labor market. The labor market is weakened. I don't know if we talked about this, but there was a revision on the Bureau of Labor Statistics numbers of the jobs between 2024 and 2025. I mentioned this on my TikTok. And they revised the numbers down. There was 911,000 fewer jobs than originally reported. So there is a weakened labor market out there. There's no doubt about it. And you weren't crazy if you thought that. You weren't crazy if you were saying there's less jobs. But even though the jobs numbers that were coming out via the surveys of these companies were showing a rosier picture, there was no rosy picture. They revised down 911,000 jobs. That is a lot. So almost a million jobs revised down. That is a lot. So the picture is not as rosy as it was said to be. So again, check out the TikTok if you want to get some of my daily sound bites at Delano Sapporo. You'll see it there. And I did talk about that. That's crazy. So again, with this inflation number and jobs, again, it's not painting a rosy picture. And again, that's why we know the Fed has to cut. The picture isn't rosy anymore. They need to spur economic growth despite, and potential uptick in inflation. They need to spur economic growth because the job market, economy, those things are starting to really, really slow and grind to a halt. Something that didn't grind to a halt is Klarna. Klarna's share jumped 15% in the market debut as the Swedish fintech raised 1.37 billion in their initial public offering. The shares opened at 52, above the IPO price of 40, and closed at $45.82. They said the listing was more than 20 times oversubscribed. And you guys are familiar with Klarna. It's the buy now, pay later platform that many people are using. And it's a Swedish fintech company. I didn't know it was Swedish, but the name sounds Swedish. Klarna. That makes sense. Until they IPO'd, that's interesting enough. Love to dig into their numbers and see where the revenue is coming from. It's actually interesting, but we'll see. ESPN bets on live sports streaming. So Disney's ESPN has inked a multi-year deal with streaming aggregator EverPass Media to bring its premium sports content to bars, restaurants, and various commercial ventures. This agreement will allow businesses to stream over 2,200 live ESPN events. I just thought this was interesting. I thought it was more of an interesting story, but it's not that interesting. But it is cool. I mean, yeah, live sports. I mean, people love football. People love sports. FIFA World Cup is coming to the East Coast, coming to New York. I might try to have to check out a game. I'm a fake soccer fan. I try to pretend like I'm really into it, but I'm not that into soccer. I'll be honest. We love football. We love basketball. Soccer's okay. Well, anyways, that's the news, folks. There was a lot to go over. We did talk the market in live updates. So we want to go back to the CPI reading we hammered home. And producer price index rose 2.6% on a 12-month basis. And then we also talked about the job revisions as well as the job unemployment increase in unemployment filings. These things are all happening, all happening in real time, folks, real time. And so we have to keep our eyes on it. We have to keep our focus on it and understand what we have to do in these times. Let's actually go to our question of the day and question of the week. There's a couple good ones that I thought were worth talking. 1% of 18 to 29-year-olds, that's more Gen Z, I would assume. 1% of 18 to 29-year-olds are investing in the stock market. So what percent of Gen Z is invested? I would say 30%, 40%, right? 44%. The answer is 40%. I love it. So this is US stock ownership by subgroup. Do you personally, this is the question. Do you personally or joint with a spouse have any money invested in the stock market right now, either in an individual stock mutual fund, or self-directed 401k or IRA? And let's look at the numbers. So 18 to 29-year-olds, so that's Gen Z, said 44% yes. 30 to 49-year-olds, I think that's millennials, obviously. They said 65% yes. 50 to 64-year-olds, that's Gen X. They said 72% yes. And boomers, 65 and older, said 61% yes. So interesting enough to know, Gen X is heavily invested. They're trying to spur and get ready for retirement. Millennials are building up, building wealth. And Gen Z is like, hey, yeah, kind of. They're just getting started. They're just getting started. So that's an interesting question. I like to see that breakdown of that survey. What's the new interest rate on federal student loans? What's the new interest rate on federal student loans? It was 6.53% for 2024 2025 school year. What's our best guess? I didn't look at it, but the guess. So new, I would say interest rates have pretty much been flat, but they're going to come down. But I would say it is going to be 6.3. I'll say 6.3. Oh, okay. Answer is 6.39. I was there. I was right there. So they gave us a great little chart here. Wow. If you look at 2020, 2021, the rates were really low. They had dipped and then they started climbing in 2022, 2023, 24, 25. Level set off in 25, 26, but they're still up there, man. They're still up there. So that's really, really good to know and really, really have in the back pocket. So keep that in mind, folks. Keep everything in mind. I know it's a lot of information. It's a lot of crazy stuff in September, but just keep pushing, keep plugging away. You can do this. And we will talk to you next week.